Just going to do a trade recap on the Kiwi dollar. I only took 2 trades yesterday. I missed my big one, the pound dollar. We had planned that out perfectly, and I had set a limit order on the pound dollar to sell it essentially where the high of the day was, and then it bombed like 150, 170 pips. So I was a little bummed about that, but this one I didn't really see a whole lot yesterday that I liked. This was one of the trades I did end up taking, and here's why. So we've been on an uptrend, making higher highs and higher lows, but we had recently double topped here and broke its potential lower high. We still technically are considered in an uptrend. This could just be a little consolidation before another move up, because it really hasn't broken any of these lows here. But for a short term, little scalper, this was a nice little counter trend move. I had a couple levels here marked off, the obvious broken structure level here, and some people draw at the candle body when they're looking at this type of trade, but I like to kind of make a little zone there. You can see price had broken this zone here, closed below, and then slowly made its way back up. It took a lot longer to get back up here than it did to come down. So price action wise, that kind of tells me that there's an imbalance in who's in control of the market. Obviously the bulls or the bears kind of took over from here, and in 3, 6, 7, 8 hours, took it down from that candle high to this low, 87 pips. The bears really, other than some potential news events going on, really took them a while to get back from this level to back up into this area, and they still have failed to bring it back up that high. So over a day since then, it's been kind of trickling down here. Well, yesterday it made its way up there. If you take some fibs here, you can either do it from here or this impulse move, which is what I used, down to its low. That's right around in between the 61.8 and 78%, which are the two main fib levels that I like to watch price action at. A lot of people just set a limit order at the 61.8, but I had a feeling it would at least want to kind of retest this level here, and that was just a little bit below that. So I didn't enter here, and besides, that was kind of while I was sleeping. So price had made this bull candle here, and then this bear candle, and this was the candle that I went short on as it came back up to kind of test this 78.6 level. Trend line wise, I kind of fudged a trend line off this double top just to kind of give me a general idea of where I wanted to potentially get short. It would have been better to wait for this, but you know, that was just to kind of give me a general trend direction and where I should be looking. And you can see the action, most of the action was right around this double top trend line here. So that took part in my analysis. Another thing I had was this little squeeze that was going on from the low up like that. So price was really kind of, the bulls and bears were fighting right in here to figure out who's gonna take control. And usually when there's a, you know, a fight like this or a squeeze, I mean, there's usually a nice pop out in one direction or the other, depending on who ultimately wins. And just based on the analysis, I was banking on the bears to take over, which they did. So my entry point was 73. Let me see here, 73.22.6. So right there was my entry. I did take some drawdown on this wick up, the last ditch effort of the bulls to try and gain some ground, but my stop initially was 73.50, essentially the high. I figured if it got back up there, then the bears would probably, you know, it is in an uptrend, so the bears would probably continue up, or the bulls would take over and go on to new highs. So if it got up there, I wanted to be out of the trade. Target wise, I actually took this position off as it was kind of, you know, flattening out here and scooping out. You know, I kind of anticipated you know, more of like something like this, like a bowl shape, and then potentially, you know, another move down. You know, it really petered out here towards the end of the New York session after lunch, and I frankly was just tired of sitting here watching it. So I took it off for 33 pips. I ended up exiting the position at 72.89.6. So right about there was where I took profit. 72.89.6. So nice little 33 pip winner. You can see it really didn't make too much upside move before heading down lower. You know, so if you kind of like to swing trade or hold positions overnight, I typically I'm kind of getting more into, you know, swing trading or holding positions overnight for a couple days or so if the analysis looks good and is right. But you know, you have extra fees involved with that, so so that was the trade. Nice little trade. How I managed it intra-trade was, once I got to my 1-to-1, which was, you know, around 25 pips. I was only risking around 26 pips, I think, initially. You know, once I got down to around, once I got down and closed below this 50% there, I had moved my stop to into profit. I think just above this little congestion stuff here. So either way, I was gonna, you know, make you know, about 10 pips or so on it. I think it was right around 10 pips of profit is where I had it, just kind of just above the bottom of that little congestion area there. So that was the trade. That's how I analyzed it. That was where I had my stops and entries and target. My original target was down here, but like I said, I thought there would be a little bit more push down. And price action wise, the bears really didn't, take over too much. You can see some pretty large bull candles coming back in, and that is probably because we are in an uptrend in this. So there's still buyers in this market. So I didn't want to just kind of hold out for more and, be greedy. 33 pips isn't anything to scuff at. So, well, that was the trade. That's how I managed it, and my thought process during. And that's it.